In this session, we're going to look at discounts. So we'll start off with a simple definition of a discount. Well, a discount is simply a reduction in the normal price that is offered to a customer. Now, we have a number of different types of discounts. There are those that we would describe as unconditional. What we mean by this is that it is a discount that's given to customers at the point of sale. So the unconditional discount is included on the invoice itself and taken into account in the amounts that's demanded on that invoice. These would include things such as trade discounts and bulk discounts. But we also have conditional discounts. Now these are discounts that are given to customers after the point of sale if certain conditions are met. The main one being a settlement or prompt payment discount. So we'll start off by talking about how we treat unconditional discounts. Now, an unconditional discount includes trade discounts, and here we're talking about a discount that's offered by a business to other business customers. We also have bulk discounts. These are discounts that are offered to buyers of large quantities. Now, these types of discounts are applied or are included at the point the invoice is prepared. So the amount that is charged on the invoice takes into account these discounts. So when we calculate VAT on the net prices, we're going to calculate the VAT chargeable after these trade discounts and bulk discounts have already been applied. So let's have a look at a simple illustration of this. We've got David who offers a 15% bulk discount to customers that buy more than, say, 100 units of product X. And David makes a sale of 200 units to one of his credit customers, Sandra. Now, the normal price per unit of product X is £15. So we'll start off by working out the price of these units before we apply the bulk discount. So we have product X, £15 each, 200 units, that's £3,000 in total. We can then deduct the bulk discount that would be offered. So that's 15% of £3,000 or £450. So the net price after we've applied that bulk discount is £2,550. And it's on that amount that VAT at 20% would be applied. So we have VAT of £510, and Sandra will have to pay that gross amount of £3,060 on this sale. Now, the net price of £2,550, the VAT of £510, and the gross of £3,060 are all the amounts that are going to be recorded in the sales day book and then in the ledgers. Now that we've had a look at unconditional discounts, we'll start looking at conditional discounts. Now, the main type of conditional discount is a settlement discount. And these are discounts that are offered to credit customers in order to encourage those customers to pay earlier than they need to. So we might have, for instance, a business that offers its customers 30 days to pay, but it might want a quicker payment, so it might offer a settlement discount to encourage quicker payment of, say, 1% for payment within 7 days. Now, At the point of sale, that business does not know whether or not that customer is going to take up the discount. It might have a good idea, but it certainly doesn't know for certain. So when we prepare the invoice for this sale, the VAT is going to be calculated on the price before the settlement discount is applied. The net amount shown is going to be before the settlement discount is applied, and so is the gross amount. Now we have two possibilities once the invoice has been issued. Either the customer will take that settlement discount by paying early, or they won't. We'll start with the situation where the customer does not take the settlement discount. Well, where this happens, there is no further adjustment required. What we'll do is we'll simply record the normal amount in the sales daybook straight from the invoice itself, and those amounts will then be transferred in due course into the ledgers. The gross amount shown on that invoice is the amount that the business will seek to collect from that customer. The next possibility is if the customer does pay within the settlement period, in which case they are able to claim that settlement discount. So the customer, when they come to pay, they will pay slightly less than the gross amount shown on the invoice. Now, because of this, we're going to have to put through a number of adjustments in the books to record that discount that's been allowed to the customer, and also to make sure that the amount that's recorded as being owing from that customer doesn't include that discount that's been then taken. So where a settlement discount has been offered to and then taken up by a business's customer, what we do is we issue a credit note for that discount. And this credit note will then be recorded in what's called the discounts allowed daybook. Normally credit notes are recorded in the sales returns daybook, but where the credit note is being given for a discount, then it'll go in this new book, the discounts allowed daybook. Sometimes, however, we might be talking about the business itself taking up a discount by paying one of its suppliers earlier. Well, here, once the payment has been made, a credit note for that discount will be prepared by the business's supplier and then will be received by the business itself. And that credit note will be recorded in the discounts received daybook and not the purchase returns daybook. Let's look at an illustration. So we have a business that's issued an invoice for the following amount to its customer Amy. The invoice was for £10,000, on which VAT of £2,000 was charged, so a gross amount outstanding of £12,000. Now, settlement discounts were offered for payments within 7 days, and the discount was 1%. So if Amy pays within that 7-day period, she'll then be able to make a payment of slightly less than £12,000 to clear the outstanding amount. The actual amount that she would pay would be £11,880. So that's 12,000 less 1% of 12,000. So what the business will do first of all, when that sale was made, they will record a sales invoice for £10,000 plus VAT of £2,000, gross of £12,000 in its sales daybook. That £12,000 gross amount is also going to be included in the on the debit side of the sales ledger control account, and will also be shown in Amy's account in the sales ledger of £12,000 on the debit side. Now, once the payment is received, we know that we have to record this discount that has been allowed to Amy, and we'll prepare a credit note for that discount. Now, the gross amount of the discount is £120. The VAT is 1/6 of that, £20, and the discount that's been allowed is £100. So we'll then start recording that credit note. Well, in our discounts allowed daybook, we would record the credit note number relating to that discount. We'd record the net, the VAT, and the gross amounts. We can then start posting those amounts to our ledgers. The way that these will be posted is as follows. The net amount on that credit note will be debited to the discounts allowed account in the general ledger. The VAT will go to the VAT control account, and the gross will be credited to the sales ledger control account. We'll also make a posting to the sales ledger, specifically Amy's account in that sales ledger. And there we will credit Amy's account with £120. So when we look at Amy's account in the sales ledger, the gross sales of £12,000 will have been debited to her account. Then when we receive payment, that payment of £11,880 will be credited to Amy's account, and the gross amount of that discount allowed will also be credited to Amy's account. And if we look, we'll note that both sides now the total of both debits and credits comes to £12,000. And this indicates that there's nothing left outstanding on that gross sale, which is what should be the case. So let's now have a look at the situation if a business takes up a supplier's settlement discount. We've previously looked at what happens when we're dealing with a settlement discount that's offered to customers. So let's look at it from the other point of view. So where a business takes up the offer of a settlement discount, it's going to pay the gross amount less a little bit in respect of that settlement discount. Once the payment has been made, it's then going to receive a credit note from the supplier, and we'll record details of that credit note in the discounts received daybook. We won't record it in the purchase returns daybook, which is where we record most credit notes. So let's illustrate this. We have a business that receives an invoice from its supplier Zach for £3,000 plus VAT, a gross amount of £3,600. Now, the business, Zach offers settlement discounts of 2% for payments within 10 days. And let's say that the business does pay within 10 days and then takes or receives that settlement discount. So the business will actually pay £3,528 and not £3,600, and that's £3,600 less the 2% settlement discount. So the business itself, once it received that original invoice, would have recorded the purchase invoice of £3,000 plus VAT in its purchase daybook. That amount would then have been transferred into the general ledger. So £3,000 would have gone to the debit side of the purchases account, £600 would have gone to the debit side of the VAT control account, and £3,600 would have been credited to the purchase ledger control account. It would also have been recorded in Zach's account in the purchase ledger. So there we would have seen £3,600 credited to Zach's account in that purchase ledger. Of course, once Zach receives the business's payment of £3,528, he will then issue a credit note to the business recording that settlement discount that's been given. So he will issue a credit note showing a discount of £60, VAT of £12, and a gross amount of £72. So that credit note issued by Zach is going to be recorded in the discounts received day book. We'll then post that information to the general ledger. So there will be a credit to the discounts received account in the general ledger of £60. There will then also be a credit to the VAT control account of £12 and a debit to the purchase ledger control account of £72. There will also be a posting to the purchase ledger, Zach's account in the purchase ledger. There will be a debit of £72. If we then look at the purchase ledger for Zach's account, there will have been a recording of the original invoice, the gross amount of £3,600. On the debit side, we'll record the payment of £3,528 and the discount that's been received by the business of £72. And now the total of the debit and credit columns equal each other, and that indicates that all of that £3,600 that was owing to the supplier has now been cleared. Very briefly and lastly, I just want to mention that there is also an alternative treatment for settlement discounts. Now, so far what we've done is we've said that when a settlement discount is taken up, that a credit note will be issued. But if a business doesn't want to issue credit notes for these settlement discounts, it can provide further information on its sales invoices, telling the customer what they should do in the event that settlement discounts are then taken up. Now, this method is not going to be tested by the AAT, so I'm not going to go through it in any detail. The only thing that I will do is I'll bring up and record an invoice showing the way that this information would then be presented if a business wished to avoid the hassle of issuing credit notes.